Hello, I'm your host, Effie Pilarinu, and with me today is David Pope, who is Managing Director of Quantitative Research at S&P Global Market Intelligence. He's joining us from Boston today. Welcome, Dave.
Thank you, Effie. It's a pleasure to be with you.
Well, you know, we at least have met in person here in Geneva in at least one, I think two of the events at Access Think Tank. And we've had the opportunity to have this human contact that we're all missing and valuing a lot at this time, right?
I know it seems like so long ago, doesn't it?
It does. Actually, this week for me here in Switzerland, it was the first week that I did join a physical event that was limited in the sense that the speakers, the panelists were physically together, but the audience was still at a distance. So I guess, you know, we're all in a very new normal. But let's jump into our topic. We want to hear from you about, first of all, what kind of research you're focused on at S&P Global Market Intelligence. I know that you are heading the so-called Quantamental research. Let's start from there. What is Quantamental research, and what products and services are you offering for your clients under that series?
Yeah, thank you, Effie. A great question. Quantamental research brings together two disciplines, the quantitative research with the fundamental research. And so we bring those two together and we call it quantamental. So what it is the empirical rigorous application of fundamental principles. And so we test these ideas that fundamental investors have been using for a long time, and we apply modern day data science and empirical rigor to those ideas. So the team produces regular written white papers that are actionable empirical pieces that demonstrate the value proposition of many, many content sets that are available at S&P. So when we met last in Geneva, I believe we're talking about natural language processing of earnings call transcripts. And this is a really interesting area that the team has been focused on, but we focus on lots of other areas as well. So supply chain is one area. We've been looking at foot traffic data. We bring these ideas together in ways that are actionable and pragmatic for our decision maker clients and investor clients.
It's very interesting. I was looking at some of the reports, the thematics that you put out, especially, you know, from March on. For example, you mentioned already foot traffic data. I was reading the report that you had that relates to REITs. You know, and obviously investors and asset managers that couldn't have real-time data helping them to understand what's going on in the real estate market. And others that I was looking at that had to do with climate change and COVID. Very, very interesting topics. What I want to ask you is this a combination of alternative data sets, traditional data sets, and as you said, the methodologies? And how has alternative data usage changed in your research?
So until recently, decision makers relied on what we would call traditional or core data sets. So these would be financial filings from companies, analyst written reports. However, with COVID, this information has been disrupted, and much of it's been delayed. So we saw, for instance, in the US, 300 fewer annual filings in April than the year prior. and that was made up in May. We're seeing a lot more companies uh, experiencing financial stresses, and so auditor ongoing concerns have risen. Bankruptcy related metrics have also risen. So investors and decision makers are left with sort of this information gap. And in many ways, alternative data can fill that information gap, particularly if it is more timely and granular. You mentioned foot traffic. What we've done with the foot traffic data is we've joined it with all of our REIT property data sets. So we know every single property owned by every single REIT. Many of these are malls, some are hotels and casinos, but also many are office buildings. So we're able to watch in near real time the foot traffic return or not return to those locations. So it provides much more timely information that fills that gap, that information gap that's been created by the recent crisis.
So, would you say that the spike in demand, which I assume it's not only in the volume, but also a demand for a richer set of the so-called alternative data, do you think that is here to stay? Or once we normalize, whatever normalize means, this will return to sort of lower levels?
Yeah, I see it as a continuation, as an ongoing trend. Even before the crisis, many of our clients were seeking these content sets out to gain an informational advantage or to provide a more complete picture for their decision making. Traditionally, our client base was predominantly asset management, but our fastest growing segment at this moment is non-financial corporates. So many of these companies have developed data science teams, and these data science teams are focused on competitive intelligence, supply chain logistics, in managing the company in a more efficient way. And so we're seeing that not only is the demand for alternative data strong, but it's also broadening. Uh,
So,
we recently launched a marketplace for these data sets, which can be referenced outside of a login at marketplace.spglobal.com.
mhm. So you've seen really a shift from basically using alternative data for the generation of alpha from the investing community to using it for business decision making and planning, basically.
Yes, that's right, and even some government use cases. So we've had a number of big wins with government entities in the U.S.
Very interesting. You know, I was thinking that this term that we all use, alternative data, might be soon very much outdated, and it's just more about real-time data, or at least close to real-time data, because all these sets, that's their biggest value, right? They're not lagging indicators, and as you said, they're much more granular, but the real time is where the value is, correct?
That's right. So it's more timely. I don't need to wait until a company reports their financials to know what their sales are. I can analyze them almost as they're occurring.
Yeah, right. So do you think that, as you said, it's much broader than the investing community, but will this lead to an improvement in actionable techniques? Because you are, I mean, you're offering both, right? You're offering the data, your customers can get the raw data and do their own analysis, but you're also providing these actionable techniques, right? Or insights.
That's right. So the challenge used to be getting your hands on reliable data. I laugh about a story of a portfolio manager I worked with at my former employer, who told me that the way he obtained prices of his stocks was to look them up in the paper the next day. So we've moved away from that world into the opposite situation where we're drowning in data. And so we need to develop and refine techniques to extract the information content in that data. So we used to have very little information and it was hard to obtain. We live in almost the opposite situation where we're measuring almost everything. And there's a lot of noise in the data, and separating that signal from noise is really what the challenge is at the current moment.
So essentially, what I'm hearing from you, Dave, is that data as product is commoditized, and the value creation is really in analyzing and actionable techniques, and that's clear. Do you feel that during this period, crisis, recovery, wherever we are, it, did we get more people, entities, business to buy in to the fact that the machines can tell us what is going on, and this is more about algorithms and the actionable insights? Did we actually listen to the machines, or were we biased? What have you seen from your client base and from the market?
Yeah, there was a strong trend for many years um, of our clients looking for more information and more power to analyze that information. I would say that the COVID has really been an accelerant in that trend. So I think that the trend was well entrenched prior to the COVID outbreak, but because there's been what I'd call a structural break, and many of the traditional data sources have become less reliable or less timely, that the astute and the sophisticated decision makers who have capabilities have been looking to fill that gap with both additional data sets, some of which is commoditized and some of which is unique, and also capabilities. So there's a big push for building capabilities, and that means two different things. One is processing. So a lot of these data sets are enormous, and so it requires special processing. So for instance, the analyzing of the unstructured data in earnings calls is computationally expensive. So when we were embarking on analyzing that data, we had to build out a brand new capability using Apache Spark to do that. And similarly, as decision makers and data scientists are working with larger data sets, need to seek out tools that will allow computation as well as the linkage of these data sets. So one data set by itself may be great, but the leverage really comes when the data is joined with other content sets.
Yeah, in a larger context, that is.
Yes.
What would you say, have been your challenges from as a real experienced and I would say dedicated? I think all your career has been in quantitative analysis, right, Dave? Or am I wrong?
No, that's correct. I was a quant before we were really even called quants, and before we even referred to things like big data. So yes, my entire career has been dedicated towards what's now called data science.
So, what would you say was the biggest challenge from your point of view during this period on the work that you do? And also, what sort of rewards or opportunities came up unexpectedly during this period?
Yeah. So there's a lot of people who understand data, and there's a lot of people who understand higher level math, and even some people who understand both data and higher level math. But the challenging component for the best quality of data science or quantitative analysis, in my opinion, is subject matter expertise. And that is really hard to develop. It's hard to discover. And even if you develop, say, expertise in investment management, which is really where most of my career has been, I really lack any subject matter expertise in another field, say ESG. And so that's been the biggest challenge. One of the biggest surprises was using foot traffic data. We have a lot of properties that are office buildings, and who thought that we would ever be interested in foot traffic at office buildings? But it turns out that's really important right now as different companies consider reopening, and different sort of cohorts of employees consider whether they'd like to go back to the office or remain working remotely. So that data we didn't really appreciate would be so valuable, um, and it allows us to look at those dynamics that are changing on a regional basis.
David, what I'm hearing from you is that when we're thinking about the role, the interaction of humans and machines, data in this case, in managing uncertainty, do you agree that humans have to always narrate to the machines what they need to, decipher and tell us what insights we can gain from the data, and the machines can do the computations? But we humans have do the narration, like in the example that you said, we have to decide that it makes sense to look at foot data or whatever it is. And that part, you have to be a subject matter expert. You have to be a human. The machine can't decide that for you. Do you agree?
It's a tricky question. I think what you're talking about is supervised versus unsupervised approaches,
Mhm.
where supervised has that human sort of interaction or even supervision, guidance, or maybe it's even the human ideas that come first, as opposed to unsupervised, where an algorithm goes and plows through data and uncovers relationships.
Yeah.
My team's philosophy and our approach is a 100% supervised
Super.
approach. Um,
Okay. Okay.
and I think that the reason, oh, okay.
I mean, I was more, as you said, supervised. To me, it's about who is sort of designing the hypothesis, if you want, that the data is going to test. Is that what supervised means, or it means more than that?
Yeah, it means more. I mean, I could tell you a funny story. When we were starting to analyze earnings calls, we thought, well, maybe we'll just let the computer tell us what's important. And so we trained a machine learning algorithm to look at stock price returns after an earnings call, and then look for groups of words that led to outperformance. And it's a funny story, but it makes a point. One of the phrases, it wasn't number one, but it was in the top, I think, two or three phrases that led to stock price outperformance was "good morning." And every operator on every earnings call that takes place in the morning, pre-open, starts with "good morning." And so it's humorous, right? And as people, we understand that that's clearly not a driver of stock price performance, but a machine can't tell the difference.
Right.
And so it's that human capability of understanding what's a real relationship and what's a spurious relationship, not just at the hypothesis construction stage, but throughout the entire process. So that's really, I think, what I think of when I think about supervised learning.
Mhm.
The other component is transparency and repeatability. So if I conduct some analysis and I'm excited about it, I should be able to convince you, Effie, and then if you're excited, you should be able to reproduce my results.
Correct.
So that transparency element is also important because many of us in this business are pretty skeptical, and we really don't believe something unless we're able to do it ourselves.
Correct, correct. So let's go back because you did give me a sort of a challenge for your research and your focus. But let's talk about the opportunities that came up or the rewards during this period that were unexpected, if you like.
So thank you for asking. Our natural language processing work, actually Frank Zhao on my team has led that work, has really garnered a lot of traction with our clients, and we spoke at your conference last fall on this topic. And Robert Engel has picked up on this research and recently published two pieces. One is COVID related, and I believe it is now in the public domain as of yesterday on SSRN and also his academic website at NYU. And that obviously is a nice citation and a recognition that the work we're doing is impactful. He ties it to stock price volatility, so he looks at language and earnings calls and ties it to subsequent stock price volatility.
Very interesting. So that's clearly a recognition of the quantamental research that you're doing. How do you differentiate the kind of quantamental research you're doing compared to others in the market?
Yeah, good question. We have three criteria for deciding what to work on. So there's so many interesting projects out there. So how do you prioritize your work and make sure you're focused on the right thing? And they're very simple rules that we follow. Number one, the work that we do needs to be actionable and of broad interest to our clients. And number two, it needs to be able to tie to a product at S&P. So we work for a for-profit company. So we're at the end of the day providing value propositions for product, which is really underlying content sets that are available commercially. And then three, are we able to execute well on it? Mm-hmm. So it really comes down to that first rule of actionable and being of broad interest to our clients. And in order to know what that is, what's of broad interest to our clients, you need to talk to your clients. And my team will do hundreds of client firm visits a year where we're in their offices, meeting with clients, talking about what they're working on, what they're wrestling with, and what their challenges are. And the great thing about our clients is they're not at all shy about telling us what their challenges are. And so we take that back and we structure our work accordingly. When we go about doing our research, we try really hard not just to reproduce work that somebody else has done. We try to add to the body of knowledge that is already out in the world in some small way at least, and hopefully a significant way. So I think those are differentiators. I think that takes a lot of effort. It takes a lot of connection to clients and listening. And to me, that's the biggest differentiator.
And you're also painting a picture which goes against the stereotypical understanding of a quant research group of people sitting, in their desks, their cubicles, with their computers, not being very social or connected with the market. And on the contrary, you are saying that the team is primarily listeners, and then they go back and do the work. And that's quite a set of skills that's required on top of the data science and mathematics and so on.
I like the way you put that. That is a stereotype.
Yeah.
Our clients do make us better. There's no doubt about it.
Great, great. And now, from what you're telling me, you're opening up to kind of a new cluster or group of clients, the corporates that are using the alternative data for their business decisions, and that requires a different kind of listening than the investment management part. And but it goes along the lines of businesses, blurring the lines in terms of the different areas, and you are growing. This part is growing, and it's changing how humans and machines interact. That's clear. Before we close, Dave, I want to ask you, of course, I would share with our audience the links to your Quantamental research, but you also mentioned the marketplace. Before we close, can you tell us a little bit more about the marketplace? And again, we can share the pointer there too.
Sure, happy to, and thank you for asking that question. The marketplace is a really exciting initiative at S&P Global Market Intelligence, where we're bringing together content sets from all over. We're bringing alternative data sets that we have internally to market. We're bringing free content sets that are widely available already to the marketplace. And we're partnering with very select third-party partners to bring their content sets to the marketplace. The foundational principle of the marketplace is that the data is linked. And so what that means is that our clients no longer have to struggle to bring data sets together in order to perform their analysis, that the data is already linked. And to us, linking means any relationship that is important to the analyst. So it could be linked by company ID, by people ID, by location, any relationship that is important to the analyst. So we're bringing on hand-curated content sets that complement each other and create a more complete mosaic for decision makers across different disciplines. So we're very excited about this. We just launched, I believe, in April, and this will be something that we're growing and adding to for years to come.
Great. This is a wonderful ecosystem approach that will, I'm sure, show that value creation new value creation comes out of these synergies. So thank you so much, Dave, for being with us today, and hope to see you soon in person here in Switzerland.
Thank you, Effie. I hope to see you soon as well.